if you're speaking about change in the interest rate environment, I don't know. I find it very interesting that we see the chief investment officer for Morgan Stanley shift from a 60-40 allocation to a 60-20-20, 60% stock, 20% bond, 20% precious metals. Michael Hartnett, the chief investment officer for one of the investment, or I think he's chief, for Bank of America, just came out with a 25-25-25-25% strategy. Again, you're seeing big money advisors, money managers, or investment officers reallocate their clients' portfolios away from a 40% allocation to U.S. Treasuries. They are pivoting into what would have been unimaginable. As Rick has often said, and I borrowed that statement from him for so long, 0.5% from Joe and Jane Sixpack to the Harvard Endowment Fund. And I caught the last part before I jumped on here where the Harvard Endowment Fund actually did buy some gold and silver. But we are beginning to see, I think, the money managers or the investment officers from these large institutions pivot the way that the central banks seem to have been doing now for at least a year or two, where they have been shedding U.S. Treasuries in favor of gold, which not only has outperformed the U.S. Treasury market. In fact, it's doubled the performance of the 10-year Treasury over the last 25 years. But look at last year, where gold was up north of 40% and the U.S. Treasury 4.5%, or this year, where you have the U.S. Treasury three-quarters of the way through the year, call it up 3%. Yet the dollar's down 11 and gold is up nearly 50. So we are witnessing a pivot away from traditional forms of investment, traditional ideology, into something that we have been talking about that was fringe. And you never heard money managers talk about anything greater than a 5% allocation to precious metals. Now, we always knew that was underweighted, certainly, but to see the CIO from some of the biggest commercial banks on the planet start to do this tells you that we are moving towards some form of a new understanding, appreciation, or integration of gold and silver into people's portfolios. And quite frankly, if they would have been listening to guys like Alistair or Rick a long time ago, these moves would have been made years ago when there was still a tremendous amount of upside to be made. Now, not to say there isn't now.
Right now, the world is standing on the edge of the biggest monetary reset in modern history. Gold prices are hitting record highs, central banks are quietly hoarding metal at the fastest pace in 50 years, and silver inventories on global exchanges are plunging to multi-decade lows. Meanwhile, ordinary savers are still sitting in dollars, a currency that's losing purchasing power faster than any time since the 1970s. Andy Schectman, CEO of Miles Franklin, says this shift isn't random. It's the end of an era, a global migration away from paper promises and back toward real, tangible wealth. And as he warns, keeping your money in dollars right now is the worst financial decision you can make.
But how much of the move has been missed, I guess only time will tell. Actually, I don't think that it's been too much in comparison to where I think it is going. But I think the most important thing to take away from this is that you're seeing some of the biggest and influential institutions here in the United States rethink their investment ideology. It's an interesting time, and I hope the general public catches on before it's too late, because I can tell you on the retail side of things, we've seen very sophisticated big money jump in with both feet over the last month or so. Business has been extraordinary. It hasn't been what it was like in 2021, January, February, silver squeeze, where we were getting 500 orders a day. Now we're getting more like maybe 100 or 150, but the size is much greater. The understanding is much greater. The mainstream, they haven't really woken up yet, but there is a subset of people probably listening to Rick and Alistair and you, Dunnigan, who are waking up. And hopefully it's not too late for the rest of the public. Certainly, I think this is a change that is long overdue and one that I welcome very much. So hopefully I understood your question well enough with that feedback and answered it appropriately.
Yeah, I'm going to follow up again because I'd like you to outline for us what you think the changed environment is related to the BRICS a global pivot away from the dollar and the treasuries, because if money managers are assuming that the last 4 decades of dollar hegemony and U.S. Treasury stability is going to be what they can expect for the next decade, how do you believe, if you do, that the landscape, that the playing field has fundamentally shifted now, and that they need to wake up and realize they're playing a different game and they need to use a different strategy?
Well, I think the biggest indictment against the system is, well, there are a couple. Number one would be the cross-border payment system, the renminbi cross-border payment system that was the bridge. And this system, which is operational, has already been connected to 11 countries in Southeast Asia, which in and of themselves have twice the population of the United States, about 800 million people. And they also have taken over as China's largest trading partner by far. They represent almost 40% of global GDP. They've also connected several Middle Eastern countries, 5 or 6 of them, into this system. And I think when you take a look at the moves that they are making, it is the development of multi-jurisdictional vaults throughout what ultimately, I believe, will be the Belt Road Initiative. The first vault is completed in Hong Kong. The Shanghai Metals Exchange is expanding their reach. The first one is done in Hong Kong. And what it basically means now is that digital yuan is immediately convertible into gold in the Shanghai Exchange in Hong Kong, if you'd like, for delivery without having to convert first back to US dollars. Now, the second exchange, ironically, is being built in Saudi Arabia. Now, if you go back to the genesis of the bridge platform, Saudi Arabia was the 5th participant, full participant in bridge. They are now building one inside of Saudi Arabia. Now, I listened to an interview with the gentleman who developed BRICS Pay, which is the cross-border payment system, B2B, business to business, retail, in essence, small bank to small bank, or business to the public. It's like a credit card, in essence, that will connect any of the folks who use the BRICS Pay system. Now, we have to understand that maybe the biggest move in all of this, that a lot of the naysayers would say the BRICS aren't big enough, they're not substantial enough. And I understand people why they would say that. Independent of their size as is, which represents, I don't know, close to 50% of global GDP. But when Sergei Lavrov, the Russian foreign minister, came out and said, we're opening this up to everyone except the West, except the dollar, the pound, and the European Union, the bells went off, and they should for everyone. And so the gentleman who is setting up BRICS Pay, the developer, said, yes, we are in the process of right now rolling this along with BRICS Bridge, which is central bank to central bank. These are being opened up and rolled out through the Belt Road Initiative right now. That's 75% of human population. And then you throw in the other institutions like the Shanghai Cooperation Organization and the Eurasian Economic Union, along with the BRICS. These are all very closely tied entities. They're not all part of BRICS, but they will all be able to settle on this cross-border payment system that settles in 7 seconds, free from SWIFT interference at a 98% reduction in fees. But the kicker to it all is that, yes, they all would use their own cross-border payment central bank currencies, the digital currencies, that the majority of the countries in the world are already developing or have developed. The key is that they will be able to settle imbalances in gold, and ultimately, through a series of multi-jurisdictional vaults that started in Hong Kong, is now being built in Saudi Arabia, and then through the rest of the Belt Road, so that they can settle imbalances in gold or completely settle in gold. I think it is a trend that is growing with legitimacy by the day, and I think to underestimate it is a mistake. I think that that's kind of what they're counting on. I guess we'll see how it all plays out. This is not a common currency. This is a common settlement currency, with gold replacing not the dollar, but really what stands behind the dollar, the trust that we've lost.
Schectman explains that this transition began quietly within the institutions themselves, the very same ones that built the modern financial system. For decades, the 60-40 portfolio, 60% stocks, 40% bonds, was gospel on Wall Street. But recently, even the chief investment officer at Morgan Stanley scrapped that model, shifting to a 60-20-20 mix that includes precious metals. Bank of America's Michael Hartnett has done the same, moving a quarter of recommended portfolios into hard assets. What used to be fringe owning more than 5% in gold or silver is now mainstream. And there's a reason. Gold has outperformed Treasuries for over 2 decades, doubling the total returns of the 10-year bond. In 2024, gold climbed more than 40%, while Treasury yields barely cleared 4%. This year, with the dollar down 11% and gold up nearly 50%, institutions have finally realized what central banks already know. The world's paper assets are on borrowed time. Meanwhile, Schectman points to something even bigger happening behind the scenes: the rise of the BRICS gold settlement network. He explains how China's Enbridge platform, already linked to 11 Asian nations and multiple Middle Eastern economies, allows instant settlement of trade in gold, bypassing the US dollar completely. Saudi Arabia has joined in, building new gold vaults under the Shanghai Metals Exchange system. Russia, India, and China are creating a settlement layer where central banks can transact directly in gold or gold-backed digital currencies. And when Russia's foreign minister announced, "We're opening this system to everyone except the West," the message was clear. The dollar's monopoly is over. Schectman calls this a new Bretton Woods, but this time, gold is the referee. He says what's forming now isn't a single new currency, but a common gold-based settlement system that restores something money lost long ago: trust. And as BRICS expands to cover nearly 75% of the world's population, that trust is being redefined in ounces, not interest rates. At the same time, U.S. fiscal behavior is accelerating the exodus. $2 trillion deficits, non-stop borrowing, and now talk of 150% tariffs on BRICS-aligned trade. Schectman says these aren't tariffs, they're sanctions. They're pushing countries to unite around gold and to reject dollar-based systems that can be weaponized overnight. The dollar, he warns, is becoming the world's biggest liability. And when he says assets feed you, liabilities eat you, that's not just philosophy, it's survival. He believes those who continue saving in dollars are watching their purchasing power dissolve in real time, while those moving into gold and silver are quietly front-running history.
When you add into it the BRICS pay layer, which is the B2B side, where anyone who possesses this technology will be able to use it to conduct business. And the fact that it's being rolled out to 75% of human population, the fact that the only institutions, the only countries that will not be able to use it are those within the European Union, the UK, or the United States. All of this settlement outside the dollar, whether it be on central bank side or on the B2B side, on the retail side, is chipping away little by little at the dollar hegemony. And then when you add into it the ability to purchase gold instead of U.S. Treasuries, as has been the status quo forever, this chips away at the reserve status. And why would anyone want to own our Treasuries with our fiscal irresponsibility, $2 trillion deficits every single year, and the weaponization of the Treasury market, the ability to sanction? And President Trump, God bless him for doing what he's trying to do, but you know, when you say to the BRICS countries, if you do this, you unite, we're going to add 150% tariff. That is not a tariff. That is a sanction. This is what is pushing all of these countries together. And I guess, to me, the stroke of genius in all of this is not just making it proprietary to the BRICS countries, but opening it up through a series of treaties, if you will, through all of these countries who are in some way or fashion tied to the BRICS countries. And that, to me, is the key to, I think, this becoming an idea that has merit to one that is wholly legitimate over time. Yeah, sure. I mean, I think if you look at what the premise is of the Mar-a-Lago Accord, Stephen Mirren, who coincidentally has filled the vacated spot at the Federal Reserve, and much of what President Trump talks about, it is to somehow find a way to bring back manufacturing, and that would start with the devalued dollar. I think saving in dollars, as Rick is famous for saying, if you're not a contrarian, you're destined to become a victim. If you save in dollars, you're going to go broke. When he said on my podcast, when I interviewed Rick in just a moment ago, he said he believes a dollar could lose up to 75% of its value. I don't think you need to know much more than that you need to have assets. Assets feed you, liabilities eat you. The dollar is a very big liability right now in terms of retaining and maintaining purchasing power. The dollar's down 11% already this year against a basket of currencies. It's down nearly 50% against gold and silver. So to me, the biggest mistake people can make is to have too much emphasis, if you will, on the U.S. dollar. And I think that is an easy one. At least to me, that's a softball. So it would be to mitigate your exposure to the U.S. dollar best you can and find assets that will do well in this type of environment. Precious metals, equities, even cryptocurrencies. I think that keeping your money and saving in dollars is the absolute worst decision one can make right now.
Andy Schectman's message is simple. Don't wait for the mainstream to tell you it's time to buy gold. By then, it'll be too late. He's not predicting the end of the dollar tomorrow, but he is warning of a slow burn, a gradual collapse of confidence that will change everything from trade routes to retirement portfolios. As gold flirts with new highs and silver's industrial demand soars, the window to reposition is still open, but narrowing. The next decade won't reward those who save. It will reward those who prepare. If you found this breakdown valuable, subscribe to Macro Edge for more high-impact insights into gold, silver, and the global financial realignment. Every week, we bring you the voices who see the storm before it hits. Question for you. Do you believe the BRICS gold settlement system will replace the US dollar as the backbone of global trade? Or will the US fight back with a new digital dollar reset? Drop your answer in the comments. Let's see who's really paying attention before the world's next monetary chapter begins.